Have you ever wondered how some people just seem to always know when to buy, when to sell, and which projects will have the most promise for the future? Well, in this video, I'm going to talk about 5 indicators that I've come across on my personal journey in crypto, and I believe these will help you navigate the market more safely, more confidently, and with a stronger edge than 99% of people in crypto. So let's get into it. Welcome to the Crypto.Trainer YouTube channel, where we teach crypto for the average Joe. It was 2022 and crypto was melting down. Terra Luna had gone to zero, the FTX fraud had been exposed, and Bitcoin had gone from a price of around $45,000 in April to $15,000 in November, and everyone was asking the same question: should I be buying? And I answered that question for myself by using this one indicator that we're going to look at right now, and this is the Bitcoin MVRV score, and you can find this on lookintobitcoin.com. And essentially what we're looking at here is a relationship between the measured value or the market value of Bitcoin. Okay, and this is the black line on the chart. And so this is the current price of Bitcoin multiplied by the number of coins in circulation. And it's juxtaposed against the realized value, which is the blue line. Okay, and this takes the price of Bitcoin when the Bitcoins were last moved, when they were sent from one wallet to another. Essentially, what the realized value does is it adds up the individual prices of when Bitcoins were moved. It takes an average of them, and then it multiplies it by the number of coins in circulation. And so it strips out that short-term noise. And so when you look at this chart and you look at the relationship between the black line and the blue line, they ultimately give you something called a Z score. Okay, and the Z score is represented by the orange line. And so in periods where the black line, the market value of Bitcoin, is above the blue line, this is when we're in bull markets, we're trending upward. You can see that most recently here. You can see that this black line has been above the blue line, since early 2023. Okay, and this is when the market is generally trending up. There are also periods where the blue line, okay, that will be over the black line. And we see that relationship in the Z score when the Z score dips down into this green area. And essentially, to break this indicator down into a simple sentence, it's you want to buy the green and you want to sell the red. Okay, so this green area, the 0 line on the Z score chart, gives you a great area to accumulate. And so there was a lot of fear in the market. I was looking at things in 2022 and saying, wait a minute, crypto is here to stay. Bitcoin's here to stay. This thing is not going to zero. There's an indicator that suggests, based on historical cycles, that this would be an ideal time to accumulate. And so that's exactly what I was doing in 2022, even when it was tough. There were weeks where I was really nervous about executing in the market and putting my funds in around Bitcoin, and it has paid off to this point tremendously. But what we're looking for going forward, we kind of see we're in the middle here between the red and the green in terms of where we are now. We're recording this in April of 2024, before the Bitcoin halving, and so I would expect to see, on some level, this Z score is going to trend up towards the red. We can see over time that we've got, sort of diminishing returns here. We've got a series of lower highs. We've got a high here, a lower high here, a lower high here. So will Bitcoin and this Z score push up into the red? I'm not sure. But generally, I'm looking for the trend of the Z score to go up towards the red. And for sure, there'll be a point in the future where this Z score trends back towards 0. There'll be a lot of fear in the market. Something will happen that will make the market retrace. And that's when I'll be looking to, for sure, accumulate Bitcoin in larger quantities. So the MVRV score, something that you definitely should put in your tool belt to use. And it's great to know when to accumulate or when to buy. But the next logical question you might have is what to buy. And we'll talk about that as we look at the next indicator. Making this critical mistake can destroy your portfolio and even your life. It's very easy to get excited about a project you just come across and think that you're about to invest in the next crypto gem without having a critical piece of information, and that's the project's tokenomics. And when we talk about tokenomics, I'm talking about the supply and distribution of coins or tokens in a project and how those are distributed and released into circulation. And I've personally been burned by projects such as the Graph or ApeCoin, which are 100% legitimate projects that are trying to build something of value, but I didn't understand at the time of initially investing the distribution of tokens, the tokenomics behind these projects, and I was burned. And here's something that I now use to try to avoid that, and this tool is Token Unlocks. And this is Token Unlocks, and this is a platform that you really need to be familiar with. Would have saved me a lot of pain in the past had I used it and been aware of it. And there's two projects that I think are getting a lot of attention, two layer twos on Ethereum, Optimism and Arbitrum. And I think the situation around their tokenomics is very interesting to understand and could impact their price action during this bull run. And so we're looking at Optimism here on Token Unlocks, and this site gives you a plethora of information about anything you'd want to know about the token unlock schedule, major unlock events, and just the status of where things are with a project. So looking at things like the market cap versus the fully diluted value. When you talk about Optimism right now, you look at the circulating supply of coins versus the max supply of coins, and notice that only 23% of the tokens are actually unlocked. So what happens with a lot of these projects is there's a lot of early investors, there's the team, there's other contributors to the protocol that might get an allocation of tokens, and those tokens are unlocked on a certain schedule. And when these major unlock events happen, they can have a pretty drastic impact on price. And so this portal and Token Unlocks gives you insight into that. Like you can see for Optimism, there's an unlock event that's happening on April 29th, where 24.16 million tokens, or 2.4% of the circulating supply, is being unlocked. And this has an impact on price because, generally speaking, these early investors in the project or these team members were around from the beginning. They got tokens at a certain price level, and the project has probably far exceeded that price where it currently is when the unlock happens. And then a lot of times these investors or these team members will dump those tokens on the market to realize those profits, and retail people like me and you can be left holding the bag. And so, looking further down the portal, you can even see the allocation of tokens, like what percentage has gone to the team versus early investors versus for airdrops or governance or whatever the case may be. And again, this is with the free version of Token Unlock. So there's a free version and a paid version. And so even with the free version, you get a ton of value, and you can just, again, see charts that show you how tokens are unlocked over time, the dates for major events, and how many tokens are coming into circulation. And when you find a project that you're really excited about, but you see something where only a certain percentage, like 25% or fewer of the tokens, are out in circulation, it's a red flag. It's something to be aware of, because more than likely there's going to be major unlocks in the future that could cause the price of the project to dump because of these unlocks of tokens. So definitely use Token Unlocks, use the free version, get a ton of value, and check that out. We've talked about when you should buy, we've talked about what you can buy, we've talked about how to understand the tokenomics, but one of the other major questions that data can be used to support in crypto is, when should I sell? And the good news is we got an indicator for that, and we're going to talk about it right now. Realizing gains in crypto is one thing. Actually realizing profits is something completely different. And if you had used nothing but this one indicator in the last 3 bull runs, you would have sold the top of the market within 3 days of the top being put in. And selling can be a very emotional thing, and that's why it's really important to use unemotional data to make decisions and help inform what you're doing in the market. Anytime you're driven by emotion, more times than not, you're probably going to be making a bad decision or be on the wrong path. And so this indicator is the Pi cycle top indicator. And this can be found on lookintobitcoin.com. And this is a site that I love. We used it previously when we looked at the MVRV score, but this indicator is a very simple one. It essentially takes two moving averages and looks at the relationship of them. And when one crosses the other, it has historically marked the top of the market. So this indicator looks at the 111-day moving average, which is noted by the orange line, okay? And then it looks at the 350-day moving average multiplied by 2. So it's not the 700-day moving average, but it's the price of the 350-day moving average multiplied by 2. And historically, when the 111-day has crossed over the 350-day moving average, that's when we've seen the top of the market. And we've seen it back in 2013. We've seen it in 2017. We've seen it in 2021. And so when I layer in the Bitcoin price, okay, we could see top of the market, top of the market, top of the market, top of the market. Okay, this is an indicator that I am 100% looking at and keeping an eye on. This is something you can add to TradingView to put on your Bitcoin chart. But I can assure you that when we see this Pi cycle top indicator trigger, when we see this shorter term moving average, the 111-day moving average, cross over that 350-day moving average, I will be putting out content that tells you that the market has likely topped. And there's historical references to why that might be true. So this is absolutely something that you want to have in your tool belt. You want to be aware of. You want to be looking at the market through the lens of what this indicator might be telling you and understand what the data suggests, what emotions are you feeling at the time, what's the sentiment in the market. And this can help you make an educated decision about when to sell. But in reality, you never want to rely on simply one metric to make decisions in the market. And so the next indicator we're going to talk about is one that's pretty controversial in crypto. A lot of people have opinions about, but I think it's an important one for you to know. If you can't learn to go against the masses in crypto at the right times, you're likely going to lose everything. They say bulls make money, bears make money, and pigs get slaughtered. And in crypto, with its high volatility and just the nascent market that it is, it creates an opportunity where a lot of people get slaughtered. And it simply comes down to giving into emotion and following others to the slaughterhouse. You can log into social media and you can feel the sentiment within minutes. In early 2021, everyone was euphoric, screaming for $200, $300, even $500,000 Bitcoin. And likewise, in 2022, when FTX was collapsing, everyone was convinced crypto was going to go to zero and you needed to sell everything. And while usually you can feel the sentiment online, it's always good to back that up with data. And that's where the fear and greed index comes into play. You can find the fear and greed index in a ton of places online. We're back on lookintobitcoin.com here, checking this out. And this is a very simple indicator that simply measures market sentiment in crypto. There's a lot of people that will tell you that the fear and greed index is a fugazi. It doesn't matter. I'm here to tell you that there are people that say it doesn't matter, and there are people that say it's the only thing that matters. And my hope for you is that you'll learn to be someone in the middle and understand that there is value in it, but it's not the only thing that you should be looking at. But you can look at this chart and it's just a measure of the sentiment of crypto. And you can see that when we see the orange and the red and sentiment is very low, under 20, this is where we're near the bottoms of the market and we're about to rally up. And similarly, when we're getting those really heavy green dots, this is when the market is really ramping up and people are starting to get euphoric, and understanding kind of the mentality of the herd and where most people are thinking and feeling. That's an important indicator for you to know when it might be time to switch gears and start thinking from the other side of the coin. And so when I look at this chart, one of the things that I think is interesting is that if you look over the course of time of Bitcoin, you look back in 2019, price was at $3,000 roughly. We were at a score of 11, and you keep moving forward and you see things are kind of trending up and to the right. And I think it's interesting that this low in 2022 in sentiment was, if you look back at 2019, this was the top of the market. $12, $13, $14,000. Like this was near the top when people were euphoric. This is when they were most fearful in 2022. And I think there's going to be a point in the future where you see where we are now, where we were in 2021, where all this green is here and it's euphoric. I think once we get through another cycle or two, there's going to be a point where this chart's going to indicate that $60,000 to $75,000 for Bitcoin is going to be the fear zone. There's going to one day be a time where we accelerate through $100,000 and Bitcoin six figures, and eventually we're going to pull back. And I think this $60,000 to $70,000 range is going to be an area where people are really fearful. And again, data and history tells you that when there's a lot of fear in the market, you should think about being greedy. And when there's a lot of greed in the market, you should think about being fearful. And this is an indicator that can give you a sense of that, combined with other things that you might use. And this is something that 99% of people in crypto are aware of. They know the fear and greed index exists. But the next thing we're going to talk about is something that only the top 1% use, and they use it to absolutely destroy the market. For 99% of people in crypto, they spend 99% of their time focusing on the tokens, Bitcoin, Ethereum, Solana, Algorand, whatever your coin or token of choice is. But the most savvy people in crypto spend some time understanding what's happening with stable coins. And it might seem boring, but understanding how stable coins are moving around the market can really be a solid indicator of where the market might be headed. And I'm going to show you something that you can look at today to understand that on a deeper level. There are a variety of resources you could go to look at stablecoin information and how they're flowing in the market. I'm going to talk about DeFi Llama today, but other things I would recommend are Glassnode and CryptoQuant. But DeFi Llama is an amazing platform, and I've got a video, actually another video on my channel where I talk about all the things going on with DeFi Llama and the value that it provides. When we talk about stable coins, what we're looking at here is a chart that shows the overall inflows of stable coins to exchanges. And so this chart here, I'm kind of just hovering over it here. You can see these large bars back in 2021 when we were in a pretty bullish phase of the market. We were in the bull market of 2021, and we can see there's a lot of big bars when we talk about stablecoin inflows. There were positive amounts of inflows going into exchanges, and this is indicative that there is buying pressure. So we see a lot of the big bars here on the top, positive inflows into exchanges. And then in 2022, we obviously had a huge amount of outflows when Terra Luna collapsed in May of 2022. And you kind of just see the market kind of die here. Okay, and if you're monitoring stablecoin inflows, this could just kind of be indicative of what you already kind of feel. If you're on crypto Twitter or on YouTube, like the market just kind of feels dead. Everything's just kind of going sideways, and then, we could see if we kind of dive in here a little bit deeper. I'm going to zoom in 2023, you could really see a change if you start looking at like what started happening in October of 2023. Like if I go back a little bit further, messed up there. If I go back a little further here and you just kind of see these small bars, we've got inflows and outflows are pretty calm, but there's probably more outflows overall than inflows. And then in October, things started changing, and you just see the general trend of stablecoin inflows to exchanges coming up. And generally, when people are sending stablecoins to exchanges, they're doing that so that they can then exchange those stable coins for other crypto assets, Bitcoin, Ethereum, Solana, whatever, the flavor of the month is, some meme coin. And when you see outflows from the exchanges, that's when people are selling, right? And they're taking their value off of the exchanges. So if you are monitoring this type of flow in the crypto market and you see this stablecoin activity in October, November of 2023, there was a lot of smart people on social media that were saying, hey, the dynamic in the market is changing. You need to get ready. And this was a clear indicator of that. Understanding this is something that I'll be looking at. Stablecoin flows, we're obviously in a positive trend right now for the most part. As stablecoin inflows, as we go through this bull market, potentially start increasing and we start seeing more outflows than inflows, that could be an indicator that the trend in the market is shifting, and this is a way that you can stay ahead of it. I'm confident that if you use the data and the indicators that I shared in this channel and you add them to your tool belt, you can set yourself apart from other crypto market participants and get ahead of the trends as they start forming. I've learned these things on my journey, and I create content on this channel to share it with you. If you want to take your learning a step further, I made this video where I talk about 5 tools that everyone in crypto has to use to put themselves ahead of other players in the market. Hope you find value in it, and I'll see you in the next one.